There's no such thing as a 100% win rate in trading, but ultimately that doesn't really matter. It all comes down to risk to reward, meaning how much we're willing to risk in order to make X amount, and something called a profit factor. That's ultimately what decides whether you're profitable or not. But don't worry, I got you guys. In this video, I'm gonna be going over my A+ setup. I'll take this setup 100 out of 100 times. Because of the risk to reward and because of the rules that I follow, this is an extremely profitable strategy. In fact, this is the main strategy that my students use inside of my group to see consistent results like this every single day. Okay, so the first thing we want to do, guys, is go to a higher time frame. Now, the reason we go to a higher time frame is to determine, number one, the structure, and number two, the trend. They kind of go hand in hand, right? Bullish market structure, bullish trend. So if we go to like a daily time frame, I can see that the market structure is clearly bullish here on BTC. Okay, we're making higher highs and higher lows on a daily time frame. Now, although we're in this kind of consolidation range here, you know, on a macro time frame, we're still bullish. Okay, we're still above the rising 200-day SMA, which by definition means that we are in a bull trend. Again, this doesn't take much knowledge, guys. This isn't rocket science. You can see we have this break of structure here on a daily. We're trading at 100K. We're bullish on BTC, guys. So what does that mean? Well, it means we're looking for long positions. So this is when we want to drop down to our lower time frame and look for an entry. Okay, the indicators I'm going to be using for this strategy are the easy algo indicators. These are indicators that I've created myself. I've custom coded them according to my strategies. So if you guys want access, make sure to click the first link in the description below. Now from here, what we want to do is find our key levels. Now a key level is a level with price history. It's very important to understand what price history is, okay? Not any level that you see on your chart is going to be a key level. A key level has multiple reactions in the past, okay? So for example, if I look left here on BTC, I can see that my algo has identified this key 4-hour support level, and you can see the amount of times we've reacted from this level, okay? This is a clear key level with price history, meaning that if price comes back down to this level, I can expect a reaction. Obviously, we're still rejecting from this 4-hour resistance. So once we've established that the trend is still bullish on a macro time frame, and then we have a key level identified, this is when we want to drop down to the hour time frame. We've already established that there is a 4-hour support level right around this general zone. Okay, I can also see that we have an order block here. We have a bullish order block on a 4-hour time frame. So people talk about support and resistance, smart money concepts. Guys, it's all the same thing. What you're looking for in an A+ setup is multiple confluences. That's what actually determines whether a setup is an A or a B+ compared to an A+ setup. An A+ setup is gonna have 5+ confluences in one level telling you to go long. This is gonna be the most high probability trade that you can take. We're gonna mark this out. So number one, high time frame trend equals bullish. We've already established that. Number two, we're going to look for our key level on a 4-hour time frame. Key level 4-hour with price history. Okay, next thing we look for is displacement. This is crucial when entering a trade. Okay, so what displacement is this large move up right here. So you can see, I mean, it's fairly obvious, right? This is a strong impulse move. That's essentially all displacement is. It's a strong impulse move to the upside, multiple bullish candles going up very quickly, okay? This is an example of an impulse move or a displacement to the upside. Now, the way we can actually tell that this is true displacement is to look for fair value gaps. So I can see here we have multiple bullish fair value gaps. If you guys don't know what a fair value gap is, it is made up of 3 candles, okay? We have one candle here. Okay, we have our second candle, which actually has the fair value gap, and then the third candle. So we can see that there is a gap in between these 3 candles, right? This is called an imbalance or a bullish fair value gap, essentially just verifying that this move up is a strong impulse move up. Now, the reason I like to use these fair value gaps as confluence, I don't like to use them alone. The reason I like to use them as confluence is because during this move to the upside, during the strong impulse move up, there were multiple orders filled here pushing the move up. Because you have to understand what actually moves price, right? Liquidity, open orders. That's what actually moves price to the upside and to the downside. So I know that from this general zone, from this order block, from this support level, from this inverse fair value gap, a lot of confluences here, there were a lot of buyers that pushed price up, telling me that there are still open orders here waiting to get filled because price moved so quickly, it couldn't fill everyone in time, leaving behind these gaps. So if price retraces back down to the zone, we can look for longs on a lower time frame with bullish divergences, which I'll get into in 1 second. So I'll do displacement, leaving behind fair value gaps, okay? And last but not least, okay, this is very, very important, and this is a major reason that a lot of you guys get stopped out, is you need to long and discount, okay? Long and discount and short and premium. Now, what the hell does this mean, right? So from this given range that we've created with this impulse move to the upside, if we grab our Fibonacci retracement tool, we can see anything below the 0.5 fib is considered discount, and anything above the 0.5 fib is considered premium. Okay, so if we go into replay mode here, you know, this is where you want to be looking for long positions, ideally at the golden pocket fib. Sometimes price doesn't reach the golden pocket fib. That's one of my rules. I wait for price to reach the golden pocket in any single trade that I take. It's just a rule that I use personally, but anything below the 0.5 fib is going to be considered a discount zone. This is where you actually want to enter the trade, okay? Again, only if you have these higher time frame key levels, only if you have these order blocks, only after you've seen this impulse move to the upside. Now, what do you notice about this move down? Okay, this is referred to a sweeping pullback, which is a type of corrective pullback. So I'm gonna mark this down on my checklist as well. So I want to look for a corrective pullback. Now, using Elliott wave theory, this would be like an ABC correction down. That's kind of a little bit more advanced, and that's still subjective. So what I look for in a corrective pullback is a soft landing, okay? I call it a soft landing, meaning price will come down slowly. It'll kind of consolidate before it reaches our point of interest, which is the zone. We don't see a straight move up and a straight move down. Whenever you see this kind of V-shaped reversal, whether bullish or bearish, meaning price can do this is bullish, okay? Right? And this would be bearish, okay? One move up and a big move down. In this case, it would be leaving behind bearish fair value gaps, but we don't see that on this retracement down. We see this corrective pullback. Now, this takes some time to identify, you know, the difference between a corrective and an aggressive pullback. Obviously, an aggressive pullback would be the first option I mentioned, where we go straight up and straight down, but we're not seeing that. We're seeing an impulse move up and then a nice corrected move down. This is exactly what we want to see to take a long position. And last but not least, we want to actually enter the trade. So we use bullish divergences to enter the trade on the 15-minute to 5-minute time frame. Okay, this is your entry trigger as you are approaching the zone. You can also use some other confluences like a sweep of liquidity, which we have seen right here, otherwise known as a swing failure pattern, into our zone. So what we do is we drop down into a 15-minute time frame. Here we can see bullish divergences on the 15-minute time frame, some mild reversal sells on EzAlgo, and the trend bar flips bullish right around here. So you would enter the trade, stop loss below the low, and you are going to be targeting these highs as your take profit. And here we can see the trade is now currently running. You probably would have made it break even by now, okay? And boom, hits full TP, okay? So this was, you know, almost a 1-to-3 risk to reward ratio. Again, you're targeting the highs here, okay? Targeting the equal highs here. This is where your liquidity lies. Very, very simple. That is the entire trading strategy. You need to have a key level in mind, wait for that impulse move up, wait for the corrective pullback down into your level, drop to a lower time frame, look for those bullish divergences and other confluences on our EzAlgo trading indicators. Anytime you see a liquidity sweep like this, right? We have an equal low, right? One low, two low. This low did not take out that first low, telling us that we're probably going to revisit this level just to take out these lows, tag into our high time frame level. We're obviously below that 0.5 fib, meaning that we are in discount zone. We can start to look for long. And as soon as that bullish divergence confirms, as soon as we actually reclaim this low, you can even wait for the trend bar to flip bullish for more confluence. If you take 100 of these trades, at least half of them are going to hit take profit. Now, when you're trading with, in this case, let's say a 1-to-2, okay? Realistically, it probably should be more like a 1-to-3. We'll say 1-to-2. If you have a 50% win rate at a 1-to-2 risk to reward ratio, you are going to be extremely, extremely profitable. Again, not every trade is going to be winning, but when you're waiting for this A+ setup, you're not forcing trades, you're waiting for all these confluences to be met, and you take the entry following our entry criteria, you are going to be an extremely profitable trader. So this is my A+ setup. This is my favorite setup of all time, just for the fact that we're using high time frame confluence with a low time frame entry. Not rocket science, guys. We're simply following our rules. Something I'd suggest to all of you guys, if you want to follow this strategy for yourself, is have a checklist for yourself. If you have to, take out a notepad and pen, write out these rules. You want to actually visualize them and check them as you go along, okay? If you guys have enjoyed, make sure to leave a like on this video, comment something down below if I've helped you out, subscribe to the channel for more trading content. And we've just released copy trading inside of the Pro Discord, so if you guys want to follow our Pro Analyst talk, we will actually enter the trades for you. So along with getting my personal setups and daily analysis, as well as access to the easy algo indicators, you can also make money as you're learning by following our Pro Analysts. So much value inside of the Pro Discord. I hope to see you guys inside. That's gonna be the first link in the description below, and I'll see you guys next video.